As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. Today we have a distinguished guest. Patrick Donnelly is the president of First Mining Finance. He's with us here on Reluctant Preppers to talk to us about their acquisitions and their exploration strategy, what they're seeing as a seismic shift in the precious metals industry, and how they are positioning themselves in this model at this time to take advantage of that, no matter which way the market goes. Patrick, thank you for joining us here on Reluctant Preppers.
Thanks for having me on.
We've been listening to some of your recent interviews on other channels, and very intriguing because I think a lot of people may not have heard of what a mineral bank business model is. Can you talk to us first about what the fundamental approach is that you're taking in the way that you structured your business?
Yeah, it's a great question, and it's a different business model. It was conceived by our chairman and founder, Keith Neumeyer, and what we were seeing, about 2.5 years ago, was one of the most severe bear markets with respect to gold equities we've seen in a couple of decades. And the principle behind the mineral bank model is that we were seeing highly undervalued equities and with compelling valuations, and we were going out and acquiring as many high quality assets as possible and basically backing up the truck. In a period of just over a year, we made 8 transactions and we added 12 assets. So, we're backing up the truck. We're adding assets. We're adding ounces with the view that down the road, when valuations turn around, which we're starting to see a little bit, we'd sell these assets to other companies. The idea is, down the road we'd sell these assets, but we'd hold on to residual interest in these assets in the form of royalty streams, joint ventures, and other ways to have further upside. Ultimately, the long-term goal, we'd be more like a similar structure to a Royal Gold or a Franco-Nevada or a Silver Wheaton. So in a period of just over a year, we made 8 transactions out of 12 assets. We have now 25 assets at various stages in Canada, United States, and Mexico. So
in layman's terms, you are purchasing up gold producing or promising gold sites that could be potential future producers at bargain basement prices because of the long-term slump that we've seen in the gold price market?
Yeah, absolutely. We're looking for assets that, we think have at least 1 million ounces of recoverable gold, are economic at $1,200 gold, and we think have the potential to eventually one day be a viable operation.
Now, you mentioned the timing being significant. So when exactly did you put this together, and why did First Mining Finance put this particular business model together at this time? Well,
the reason we put it together is, Keith Neumeyer, founder, he's done this before. He founded First Quantum Minerals, he founded First Majestic Silver. And he found both those companies in severe bear markets where he saw compelling valuations. And he saw that window of opportunity open up again in 2014, where we're seeing, assets trading at, less than $10 an ounce on the ground. So it was a matter of timing and the opportunity. And I came aboard exactly 2 years ago, and we merged 3 private companies. We raised $5 million Canadian, and we did a reverse takeover of a cash shell. And then we moved forward with the acquisition strategy, and simply because, gold is mining's very cyclical, and, we were convinced that at some point it's going to, get out of this bear market, and which we're starting to see now. And it was just once in a 20-year opportunity to buy highly undervalued but quality gold assets.
We've had precious metals guru David Morgan on our channel multiple times. He's talked about how we are still in an early stage of a secular bull market in gold and silver. And I was just speaking, in fact, with goldsilver.com's Jeff Clark, who works with Mike Maloney there, talking about how we're in a firmly entrenched bull market and that we're nowhere near the blow-off top, which will come when there's major movements upward in precious metals prices. But what are you seeing as far as your strategy, your initiation strategy of accumulating these properties at bargain basement prices? Are you still finding them at those bargains, or are you having to adjust your strategy as this market shifts from bear to bull?
Yeah, it's a great question. When we first started this company, one of my mottos was that it was cheaper to buy ounces than to drill for ounces. And what I mean by drilling is where you go out and you actively put money into the ground and search for ounces. Since last summer, we've seen, the market come back to life somewhat in the gold mining space. And we've seen valuations come up, we've seen liquidity come back into the market, and we've seen capital come back into the market. And as a result of that, we haven't done any deals since last June. We raised $27 million Canadian last summer, and some of the feedback we got after that raise was that, well, if you're not doing deals, what are you doing? You need to do something to move the needle. So what we felt was if we're not doing deals, and we're seeing, and also what we're seeing is, companies are getting rewarded for drilling, for doing exploration, for advancing assets. So, if we're not going to be doing deals, then I think it's an opportune time to put money back into the ground and show the markets what we've acquired and de-risk these assets. So because of that, we have, last November, we approved the $10 million budget for 2017. We're going to do about 50,000 meters of drilling on 4 or 5 of our assets. And so we're going to start, we've already started putting out a steady stream flow of exploration results. And as I said before, the market will reward us for these results. So, that's the strategy going forward. We put out some drilling results at Springpole a couple of weeks ago, some drilling results at Pickle Crow. We just started drilling on our Golden project about a month ago. We're drilling 27,000 meters there, which is a lot. There's 3 drills turning. So from Golden, we're going to be putting out lots of news as well. So we'll show to the market that these assets are viable, and also show that show there's internal value to be unlocked. So that's the strategy going forward.
We've had multiple guests on our channel over the past series of months talking about what's different from an investment risk-reward standpoint of holding mining stocks versus physical metals. And unanimously, people talk about the leverage, the increased leverage that you get from holding mining shares versus physical metals, because for incremental increases in the market price, you get an outsized increase in profitability and margin from being a producer once you have your fixed costs covered. But one of the ways that the downsides of that is that leverage can cut both ways. So people are often cautious because, as far as owning mining stocks, because they're concerned about the downside leverage as well. And if you could talk to us a little bit about, have you done anything in your business model to mitigate those inherent risks of the downside, as opposed to someone just picking out a recommended mining stock and trying to sort of speculate in that direction? What's different about people considering your business model?
Yeah, well, I think what's different from our business model is, we have, 25 assets at various stages and various jurisdictions. So we trade almost like an ETF. And therefore, normally if an investor wants to participate in the gold market, the junior gold market, they usually have to buy a basket of equities. In our case, they don't need to do that. They can just buy First Mining, and you already got the diversification. We have various assets, various jurisdictions, primarily gold. We're also very liquid. We trade, 2 or 3 million shares a day, and we're also on the GDXJ ETF. So, in terms of downside, if gold goes down, sure, it'll affect us, but I think it'll affect the other juniors, single asset juniors, more than it'll affect us. Given that we have a fairly liquid stock, we're fairly well known, and also from the fact that if the markets do turn on the negative side, we'll take advantage of it and start pulling the trigger. Meanwhile, as I said before, right now, we're de-risking a lot of our assets. We're putting money into the ground. We're doing economic studies. We're doing drilling. We're doing resource estimates and showing the markets that these assets are viable.
Let me try to say one thing I think I understood from what you said and make sure I'm understanding correctly for the benefit of all of our viewers. If the gold market goes down significantly, it would open up value opportunities for you to once again begin acquiring additional properties at bargain basement prices. If, on the other hand, when the market turns around and goes positive, then the other side of your business model kicks in and you start being able to derive profits from those assets that you already own in multiple ways, either by selling them outright or then even retaining certain residual income streams from them.
Absolutely. I think you hit it right on the head.
What is your, as you look really out into your strategic horizon, what do you see as a long-term strategy for your company?
Yeah, that's a great question. So, in the midterm right now, we want to, move these assets as far along as possible. So it's drilling, resource estimates, economic studies, all the way at the feasibility study, permitting, First Nations, and move these assets as far along as possible. We've been very clear we're not going to put them into production. That's not my skill set. I'm a geologist, not an engineer. But what we want to do is enter into agreements with other parties where the other party, for example, a mining company or private equity firm or other management teams, they move the asset into production and we hold on to residual interest. So royalty, a stream, a joint venture, minority interest, or a combination of the above. So ultimately, we'll have a collection of streams, royalties, minority interests, equities, joint ventures that are generating revenue and ultimately long term provide a dividend to our shareholders. And so that's the long-term goal. We've already had significant interest from a number of major mining companies. One thing I should mention is, because the gold market's been kind of, until recently the gold market's been weak. Most major mining companies have been trying to survive. Most of them have, were carrying significant amount of debt. In other words, they're highly leveraged, and they're focusing on cash flow. They weren't putting money back into the ground. They weren't doing exploration. They weren't doing development. Now that we've seen a much better gold market, they've been fixing their balance sheets, but they've realized that their production profile is in jeopardy because they haven't been buying assets. They haven't been finding gold. They haven't been putting assets into production. So we're going to see a supply side crunch for the next couple of years, and the majors already know it, and they're already circling the wagons looking for assets. We're not going to sell right now. We're buying assets for less than $10 an ounce. We're currently, the average developer has a price of about $50 an ounce. We think that we'll start selling these assets when we start seeing at least $70, $80 an ounce to over $100 an ounce, and that'll be further along in the current cycle. So we're going to put money into the ground, advance these assets, and we think that as we go down the road in this current cycle, we're going to see valuations go up. And as I said before, the major mining companies are desperate for assets because they haven't replaced their depleted resource bases.
So just so I understand that last point, because of the hard times we've been through in the industry, a lot of companies have hunkered down and just cut their expenses to the bare bones, including stopping spending, investing in research, stopping investing in development. And so during the same time have been accumulating assets, and now that they're seeing the revenue starting to come back in, they want to start developing, and but meanwhile you're holding the assets. So you're sitting pretty with your nest egg full of assets there.
Absolutely.
What most specific? You mentioned some recent some drill studies that you've done. You mentioned Spring Pole and another. What more specific recent results are you seeing that show promise on the properties that you've been looking into?
Well, as I mentioned, we started drilling at our Golden project about a month ago. We got 3 drills turning, and we've already sent some batches of samples to the assay lab. So I'd say within the next few weeks, we should start getting results back from the assay lab, which should confirm the quality of the project at Goldland. And the reason for the drilling program is to confirm the resource and upgrade the resource to a higher category and also expand the deposit. So, That's our focus right now. We'll probably start a small drilling campaign again at our Pickle Crow project. We're waiting for metallurgical results from our Springpole project. Springpole, that's our flagship asset. It has 5.5 million ounces, and majority of that's indicated resources. We're redoing the economics on the preliminary economic assessment. It's going to be a big producer. We think it has the potential to produce around 300,000 ounces a year. And so we hope to have the new economic study released, hopefully by around the middle of this year. And again, show the market this is a highly valuable asset.
One final question I had for you, again, back about mitigating risk. Some of the guests we've had that talk about what's essential to look for in a mining company is the experience and proven track record of the management team in delivering results. Could you hit that for us on why people should take a serious look at First Mining Finance from the regards of the track record of their management team?
Yeah, that's a great question. And let me put it this way. I used to be a mining analyst. I spent 4 years as a sell-side analyst in Toronto. And, one thing I learned when I looked at mining equities is, I'll be honest with you, mining is a very risky sector. I mean, it's very capital intensive, it's very cyclical, and therefore highly risky. And obviously, in any business, any sector, obviously, it's a no-brainer. Yeah, management is important. But I think mining, given the risky nature of it, strong management, I think, is even more critical. And also, there's very, very few people in the sector that have the track record of Keith Neumeyer. And so, like I said before, Keith founded First Majestic Silver. He turned it from nothing into, and it produces around 18 million ounces of silver per year, and has a market capitalization of well over $2 billion Canadian. He started First Quantum Minerals from nothing, and now it's one of the largest copper producers in the world. So, he's up there with some of the legends who have taken, started companies from scratch and delivered a lot of shareholder value. And I'll be honest with you, that's why I joined this company. I saw his track record, and I always bet on the jockey, not the horse in this business, and he's one of the best. So I can't say enough about Keith and how critical it is to have experienced and successful management when you're looking at equities.
I said it with my last question, but I got one more for you. And
sure.
That is, we've seen last year with some really low prices in more base metals like copper and zinc
Sure.
and so on. And those are turning around as well. When you talk about a mineral bank, it doesn't sound like it's limited to just gold and silver, or does that remain your focus?
That's a great question. You know what? When we started this company, we were looking at, exchange tradable metals, London Metal Exchange tradable metals. So we were looking at gold, silver, copper, lead, zinc, platinum, palladium. But from my experience, as an analyst, the market prefers pure plays. The market, companies that have a number of different commodities tend to trade at a discount, whereas those that stick to one metal tend to trade at a premium and a higher multiple. So, and given that we're very, very bullish on gold, we've decided just to focus on gold. If there is a compelling base metal asset, I'm bullish on copper. I'm very bullish on zinc. If I saw a very compelling zinc or copper asset, we take a hard look at it. We haven't seen anything. So I think for now, for the most part, I think our focus will be on gold. If something compelling came along, sure, we'd look at it, but, it's highly unlikely that'll happen. Well,
Patrick Donnelly, president of First Mining Finance, are there any more messages you'd like to share with our viewers before we let you go?
No, I think that's about it. As I mentioned before, the beauty of First Mining is we have a great portfolio of assets in various jurisdictions, and we're very liquid. And, we have a $500 million market cap Canadian. And so it's a great way for, the average person to, have exposure, broad exposure to the junior mining sector and run by a competent management team. And, and as Keith would say, I'm not here to make $1 million. I'm here to create my next $1 billion company. And in a very short period of time, in a period of less than 2 years, we've taken a company that had 0 ounces of gold in the ground to 12 million ounces of gold in the ground. And we've taken a company that has a market capitalization of 30 million to a company that's worth $500 million Canadian. And that's just in, a period of, less than 2 years. I can't imagine what it'd be like in another year or so. So, And now we're at the point where we're unlocking value. And so there's considerable value to be unlocked, and we're going to grow the company. And as I said before, we've done this before.
Well, Patrick, we're going to have to leave it there, but just we thank you for joining us here and enlightening our viewers. Our motto here is be aware and prepared, and you've certainly given us some new insights and new awarenesses that people can take preparation steps if they'd like to take advantage of those opportunities. So thank you, Patrick, for joining us here on Reluctant Preppers.
Thank you for having me on.